financing your next billion gain insights into successful engagements with venture capitalists and investors. Get ahead of industry trends, hear from industry leaders, influencers, founders, policymakers, and governments. Stay in the know on how to finance your next billion.
Welcome to Financing Your Next Billion Talks. We're here live again with you, and in this segment, we're going to cover the VC investment criteria. We're going to take a look at Jerome and we're going to take a look at what the VC actually is looking for when they're trying to decide who they're going to select to give money to. And I know that many of you, out there, be it you are clients, be it you're looking for money, from the VC sector, you really want to, put a listening ear, because there's going to be some information. And I want you to hear all of this all the way to the end, because it takes all of this to get to, yes, I will fund you. So thank you so much for tuning in. I'm Yvonne Gamble, your co-host, and my co-host with me is Jerome Curry. Jerome, how are you doing today?
Hey, it's a great day. It's a great day here, and we're excited to get this information to you.
All right. Well, there we go. Well, let's hop right in. There's a lot of topics to cover, and the first thing that we're going to jump in with, we're going to look at them. It's 6 things that VCs look for in a startup. And before I get into that, what I want to say is understand, start up, not start out. Okay. So sometimes we kind of get the impression that VCs are only giving money or only looking for people who are totally new to the industry. No, they may be looking for someone who has a new idea coming into the industry. It could be a company that's been in the industry for years, and now they're starting up a new division, a new service, a new innovation that they're coming out with. So we see many companies, we have many examples of those that do that. But so therefore they could just, you could be simply competing actually for the same monies that AT&T is competing. You got a new telecom device that's coming out, or with Samsung, you may be competing with them, or iPhone, or what have you, or any number of companies, because they're coming out with something new, and you could be in that market space as well. But so both of you will be considered startup. So what do they look for? What's important to them? People. They got management. Can they get the job done? What, Jerome, what you talk to a lot of VCs, you talk to them all the time. What are they telling you, as far as people are concerned?
Sure. I'll tell you this, in looking at venture capital, and one of the things that happened in looking at this industry, and the more and more time that you spend in pursuing your raise, or if you're an investor looking at this, we all know that this is a relationship business. And what happens is that when you look at the relationship, when you look at the first thing in the relationship, it's the people. And who you are matters so much more sometimes than what your product is, because who you are could really either set you up for success, or it could be a detriment to your failure. So what you want to do, you really want to look at not only who you are and what you bring to the table as a founder, but you also want to take a look at your team. And your team is a team that can get the job done, and your team is the team that can help you to get to that next level. And a lot of times what happens is people really don't take advantage of their team and of their and of the management that they have, and the advisors that they have. And so what you want to do is really listen to your team, have those meetings, and have those hard conversations that really build those relationships up and help you get to that next level. What are your thoughts on that, Yvonne, as far as the management is concerned?
It's extremely important, and one of the things that that is critical. That is one of your critical areas is who's on your management team. It and sometimes you as the visionary, the person who envisioned the project or what have you, they're not looking for you to be the one who envisioned it. If you are, you run a restaurant, you're the one who envisioned it. You're the one back in the back cooking. You're the one out front serving the food. No, they're gonna say, okay, that's not gonna work. Okay, that's not you. That's just not gonna work. And so many times, what'll happen is they will even refer you to places like the alternative board, where you could actually can put together other board people. Vistage is another one. They have CEO boards, and therefore you can get some ideas or some pointers. And they will, many times a VC may set someone on your board to be there to to observe and actually to help coach you through some of these different sessions. And they may even say to you, you know what, you really need to consider, I think your CFO probably has a handle on how to run the company, and you maybe as the CEO, maybe you should be the CFO because you have the experience and expertise in the financial area. So some of the different, so you can't be so married to these things and think, well, it's not going to work unless I'm in this exact position that I, had envisioned for myself since I was 3 years old or what have you. That's not what you're selling. And we're going to talk about that, as we go through further. So yes, your people and how they're set up, and like Jerome said, those people can actually make or break a company, or make or break the dynamics of that company getting funded or not getting funded. So if you're running out there and you're running into a lot of no, 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 and you know that you've got a great product and you got a great service that you're trying to offer, what you might want to start doing is sit back and listen to some of those conversations that you had and took notes on, and see what thread runs through. And they may have all said the same thing, more than likely.
Absolutely.
So I would say that, go ahead.
No. And that leads us right into that next point, and that another point that really VCs look for is a large, rapidly expanding market. And what do I mean by that? For example, IT is a large and rapidly expanding market. Uh, you know, the Internet of Things, I mean, it just goes on and on and on. Now, you want to have that large, rapidly expanding market, that market that's going to continue to grow. Let's say, for example, let me give you an example. If you're looking at a company, if you're looking at a market that's going to be ever expanding, you want to take a look at your total addressable market. So who all is in this market? Who all can this market address? That's your TAM. You want to take a look at is this market are the trends showing that this market is going to increase over time? These are things that you want to evaluate. So a couple of ways: what's the total addressable market size? Is it are the trends showing that this market is growing over time? For example, for if you were looking at opening up a new retail store, I mean, it better be a very diverse type of retail store, because as we know right now, the retail market is going through a huge transition, and large retailers such as your that used to be there, such as your Sears and Macy's, they're closing down hundreds of stores. So you certainly want to evaluate your model. If you're like, well, hey, I want to go into the retail market and open up a retail store, well, make sure that you understand your market structure and your market size and how addressable your market is. So just a couple of ways that you can really look into that expandable market there. Yvonne, have you seen, tell me about findings that you've seen go into a market that you just knew weren't expanding.
Well, yeah, yeah. There's several that are now that we're finding. They are kind of going by the wayside,
Yeah.
as far as being able to. One of the things that in food service, what's really going away, Dunkin' Donuts has a very good brand out there, and they have very good brand positioning with them. Well, there used to be, and we don't think about it, but there were several other brands that's also sold the donuts that you could go into, or like Boston Pies. You don't see those anymore. Those have gone away, because why? we've changed the way we're eating. And so therefore the when you're also thinking about what you're going to be selling, what you're going to be marketing, how are people eating, what are they eating, how are they ingesting, everyone is
Mm,
eating a much healthier lifestyle. And now when you think about it, you might want to start thinking about a diet for sedentary lifestyle, because
mm,
really that's, that's, I mean, that's just something, that is, I'm looking at that myself and saying, okay, I'm not, I don't, when you were in an office setting, there was a lot more walking around the office. There was a lot going, you went out to lunch, so there was just a lot of natural extended walks or extended exercise that you got just on a natural basis, even so much as going to get some water, going to get some coffee. Well, now we're just an arm's length away from everything. Everything is within arm's reach, where you are. So you might want to think of, give me something to exercise these arms with, or exercise my legs. But the types of foods that we eat, the amount of food that we eat, our consumption is going to, in the next 2 years, our consumption is going to probably be cut down almost by three-fourths of what it is currently. So
wow.
that's going to be a huge blow to the food services and to the food marketplace, because people aren't, yes, it was excellent when we first hit the lockdowns and Grubhub and all those places, that were delivering food. They were making, money hand over fist. But people started to realize, I can't fit in this chair anymore. So people had to kind of, pull back, on those things. So sometimes a market that is expanding, we have to also look at it, if it contracts. And if it
Mm,
contracts, what can I do to, how can I pivot before the market contracts to keep it
mm,
from contracting? So you have to look at it in those terms. So if you're in the food services market, I would say in food, developing new things that are coming in, think about, how you could develop to where we're going, where we are and where we have to go to, and then you will find that rapidly expanding market, because now you've got people who, the probably the Billy Blanks and the exercise tapes and the exercise gurus are more in demand now than ever before. And they had, to some extent, kind of like we're going by the way side.
yep.
But now there's a new marketplace for them. There's a new market space that has opened up for them, because people, you can't go and exercise out, outside or in gyms, and that sort of thing. So instead of doing that, there's no reason that you fit and these 24-hour fitnesses could not now put it online,
Yep.
and then people could still have their gym. You still have your gym membership, and now you just do it, at your home at the regular scheduled time. You have your fit classes, what have you. So there's always a way to think about it, to see how you can expand the market space.
Absolutely. Absolutely. Very, very, very true. Very, very true. Very true. And I think when you start to look at your market from a different perspective, and don't be so closed-minded to not see what's happening. Keep your ear to the keep your ear to the ground in your industry. Know what the industry trends are. Know if know if things are shifting in your industry, and then that way you can always be ahead. And then when you're ahead of the game and when you've already made those changes, you're already aware of the industry trends, you don't get caught like the deer with the deer at the headlights. Oh my goodness, oh, it's happened to us. And then the next part of it is really looking at, is your project commercial? Is your project set up? Is your idea, your concept set up to where it can make a profit? And I think that's where, sometimes where the rubber meets the road. You have
Yeah.
to be able to look at your idea and your concept and say, is this bankable? And Yvonne and I we've both looked at some ideas and we've said, no, that's just not bankable. I mean,
Yeah,
it's just,
yeah. But some
it,
things are, it's a great idea, but you can't. It's not something that it's just not sellable to the masses, and and that may be okay because everything is not to be sold to the masses. So therefore, what you find is that's where you get into those really scaled down niche markets, and that's when you start to decide how you can position what you're selling. But if you're looking for venture capitalists, if you're looking for money to come from investments and someone to take an equity partnership in with you, then you definitely want to be making certain that what you are selling is commercial, because they're going to be they are going to be concerned with the fact that this has to be able to sell exponentially out
absolutely.
there. And so that's going to take us. That's four of the six things. Now that's three of them. Now let's look at three more items that also go along with those six venture capital things that VCs actually look for. They want you to be, before you get to them, well prepared and focused. And I can tell you, this gentleman here, Jerome, he has just done a wonderful job with the Accelerator Hub out of Platform Capital. They have a 4 week and a 9 week training session. They even have a 3 week free session where you can actually come in, take classes, see where you are, get some great ideas, get information. It's not just, it's not the easy classes or what have you, but it's the same type of classes you would be taking if you go into the 4 week in-depth session or that grueling 9 week session. But you're going to learn everything you need to learn so that you are well prepared and that you are focused on your industry. Because the business plan that comes out of there, it has to provide clear direction. Your business plan is not something that you look at and it sounds good to you. It's nice and pretty, but it has to provide a clear direction. It's just like when you do GPS. You want a clear direction. You don't want them to take you on the scenic route. You want them to, to take you straight to where you want to go, the least cost routing, through the least amount of traffic, and to get you from point A to point B. We don't want to get to point B by having to go all the way around the Z and come back and then go to B. No. And that's how many business plans are written. We can't tell where we're going and we get lost in there. And trust me, if we get lost in there, we're not going to put you in front of an investor, and an investor is most certainly not going to spend the time. Let me give you a little bit of behind the scenes on everybody generally who is going out and wanting to do a business has worked at a corporation before. Now, when you went to get that job at that corporation, you either mailed in, emailed in, sent a letter, or what have you, your resume. Well, your resume did not go to that department head. That resume went to who? The gatekeeper, the administrative assistant, the secretary, the clerk. And they had to open it or read it. And then they went through stacks and stacks and stacks. And that's not the job that any department manager or any decision maker actually takes on. So therefore, who really was making the decision on whether or not your resume got on the desk of the decision maker? That could have been someone from a 16-year-old to maybe someone just right out of college coming in and making a decision. So if your resume didn't show something clear and direct, it did not get inside. Well, guess what? Those same people, that same group, is looking at your business plan. And if they don't understand it, if it's not something that they can easily understand, it's not going to get to that investor, because they have what they call readers. They have intake people, And these people, what they do is they're the ones that are going to go through it. That's why with the type of company that we have at St. Pete Financial Group and through the Accelerator, Platform Capital Accelerator, we actually teach you how to get your plan in front of the necessary people who need to see it. You don't need to be putting a 30-page plan in front of someone who is going to have 100 plans to read. They're not going to read it. Okay, you need a nice one page that kind of explains it, gives a synopsis. It's very easy to see. It tells a story. Story is easy to follow. I got it. Yes, this is something I can now put it on side to give to the investor to take a look at. It's got to present a clear direction. What can you tell us from the educational standpoint, Jerome, about the strategy that is strong, that it has?
You know, it's so interesting because when you're looking at your strategy, when you're looking at your game plan, um, I always like to ask companies a question: where are you heading, and what are the resources you're going to need there? And have you considered the fact of what's going to happen if this doesn't happen the way you want it to? And it's so awesome when they don't really have a clear roadmap for what they're going to do, and they haven't built in any contingencies if something does not go according to plan. And this is something that we all entrepreneurs have to work towards and to look for, is that, if this plan doesn't quite go the way that I wanted it to go, then what's going to be the contingency? How am I going to combat this, or how am I going to get around this obstacle? And what I found is that uh, sometimes as entrepreneurs, we put the blinders on. It's like I only see, and I'm very focused. I only see this one way. And so what the Accelerator Hub does is it gives you an opportunity to take a 360-degree view of your business and really understand all of the different opportunities, all of the different resources, and all of the different ways that you can approach your business. And then you fine tune it down to the one or two or three ways that you're going to go. However, you still have different things that you can pull out that strategy. If this isn't working the way I want it to, guess what? I've already got a plan for this. Or, hey, if this didn't go, you know what? Hey, our marketing didn't work. Guess what? We already talked about our marketing not being able to work here. Here's what I'm going to do next.
Where do you want your product shipped today? Make Mobamed your PPE inventory warehouse.
You know what? Hey, you want to be able to self-diagnose. That's what a lot of people do when they go to Google. Google.com has now become the doctor for a lot of people. Google, I'm not feeling good right now. What's wrong with me?
Okay.
And so what you want to be able to do, your strategy has to be able to help you to self-diagnose what's going on with your business. And we help you to be able to look at your business in a 360 view, help you to narrow down your strategy, but also give you the options if things don't work out the way they're planned, which certainly almost always happens.
Okay. And then we're going to just kind of touch on, but basically what you want to make certain is that you have an evaluation, and in your evaluation,
Absolutely.
it's a reasonable price per share that you're asking and that you're evaluating. So those types of things is you definitely want to look at not just, Google is wonderful and you can put your information in, or you can put all your parameters and it'll come back and give you an evaluation for your company. And generally that's not the true value of your company. And so you definitely want to, have a professional evaluator to give you that, because that's going to be a part of the due diligence that investor is going to want to see. And that's something by someone, who is certified actually evaluate a company. So you want to make sure that that's something that's on your plan of things to do. And basically, we spoke a little bit about the business plan, but I just wanted to here I thought it was very, very important to bring it out and really digress through it a little bit more. And that is that the goal should be to address the upside potential, the downside risk, the management we talked about, the potential dilution, and basically what that's kind of what Jerome touched on, where he says if that plan doesn't go exactly the way you want how you've gotten the business plan written, what are you going to do? What is your if then else? What is your contingency? And liquidity issues. You should have 10 people there, and this is one of the things that you will get, if you come and you take the free 3-week class with Jerome and the accelerator, and that is there's a whole section on liquidity. That liquidity is 10 people, that not investors, but these are 10 people that you would go to, and they represent probably $10,000 or $15,000 or $20,000 each, that you could at a moment's notice, or depending on what your company, if you have a high value company, that number might go up to $100,000 each. But these are 10 people, or even $1 million each, that you can actually go to and say, I need. And basically by the time you turn around and look on your computer, it's sitting there in your account. And you have to, if you don't have those people, I would tell you right now, start looking at who do I know who would fit this bill. So that means your credibility of your company, the sustainability of your company, all those things need to be put in place, because you have to have that, because there will come a time when when your company will sit at that crossroad and everything is saying no at that moment in time. But you have to be able to have these people who they believe in you and they believe in what you are doing. And if you're saying to yourself, as I'm saying this, I absolutely have no one, then you really need to come in, take that accelerator free class, and really begin to understand, and then take the class so that you know how to put together that liquidity team, so they're in place, because you never want to be at a point where you absolutely have nothing. You see huge mega companies, multi-billion-dollar companies. They said they just filed for bankruptcy or they're in a restructure, but yet their doors are still open. Yet they're still offering services. They're still selling products. How is that? They got 10 people who actually meet that. They said, heck, I need $1 million. They got $10 million at the end of the day. And that's the thing that you have to be able to do. Any thoughts on this you want to share, Jerome?
Sure. I think one of the parts of your business plan that we oftentimes cover is your upside potential. And, what does that look like for you in the future? What does your, not just, can we hit the goals this year? It's what does your potential look like? Can this company, what's your potential exit strategy? How long do you plan on being inside of this? And then also being able to evaluate, what are some of the things that could potentially, what are some of the competitive risk factors? Because guess what? As investors, we look at those things. We look at, hey, they put all this great stuff on there, but they didn't tell me, they didn't showcase that, there's a significant competitor that's in their industry that's gobbling up market share. And so they didn't put how they're going to address this competitor on their document. And you know what? I don't think that that's going to be a good fit for us, because this competitor looks like they're going to do really well. So you want to be able to address the key points and not hide anything. This is kind of the, some people call it the come to the Lord meeting, the come to Jesus meeting. When you have that meeting with the VC, make sure that your document has that information in there that showcases that you are an expert in your industry. And that's what we do during the accelerator course, is that we really look at the information that you're going to need to put in. The liquidity issues are addressed, the downside risk issues are addressed, and the upside potential is addressed in a way that's quick, in a way that's understandable, in a way that makes impact. And that's what you want to do. You really want to make, in that, I say, 10 to 15-minute window, you just want to make an impact on that investor and leave them with the fact of, you know what, I've got to see this company. I've got to have them as a part of my portfolio, because guess what? If I don't do it, then another investor will, because this company is that hot, they're that good.
That's right. Mm-hmm.
And so,
Yeah, you want to make them fight for your business. You really want to make them fight for your business.
Absolutely. And with that, it's time for that station identification, time to take that pause and get that break and give you opportunity to take some notes, get some water, and get ready for the next part.
And we're back. Thank you. And if you're just tuning back in with us, we're on FYNB Live, Financing Your Next Billion. And I'm Yvonne Gamble, and I co-host with Jerome Curry. And we're here talking about today's topic is VCs and what they look for, what criteria, their investment criteria they look for when they're trying to select whom they're going to actually put their dollars with. And this particular, it might look like what you see on the screen there may look like something that is really very simple and very easy to do. And you're probably saying to yourself, oh, yeah, I do that, not a problem. But what happens is that most entrepreneurs, what they are doing is they're not selling the financial package. When you're coming for an investment, let's look at what it says. VC investment. I want someone to invest in my company from the hundreds of thousands, well into the millions and even into the billions. Well, what we have to be looking at is we really are only talking, the most important thing is the financial package. Because you're coming into the financial marketplace. These people are all financial. Everything they do, everything they ever think about, everything they have to do is in finance. And what you are doing many times, you're coming in front of them, and we hear it. We hear it all the time, because in our business, what our particular model is, Sanpete and Platform Capital, we go to investors and we talk with investors. They are our first number one client. And we find out what they want, what they're looking for, and how much they're looking to give, how much equity they want, how much do they want as a rate of return, how soon do they want to get that back. Then we come out to the marketplace and we look for the entrepreneur who would actually fit that model and the projects that actually fit the models that they want. Well, after those sessions go over, we are your advocate. We prepare you to get in front of them through our accelerator hub. And once all this is done and you go and you have your meeting with them, they then, guess what? They contact us back. And we've heard more times than not that these entrepreneurs are there selling them their product or service as though they are going to buy it. And I can tell you, most of them do not. Most of them do not. And it's not that your product or service is not good, but they're not your client. They're not your consumer. They are the ones who are going to pay for you to get this in front of your clients and your consumers. So when you go in front of the VC market and that financial marketplace, you need to be talking about your financial plan. What can you offer to encourage our people, Jerome, on this?
Sure. I think one of the things that you have to do in looking at your business plan and looking at your idea, your pitch, the hat that you really have to put on is the investor hat. Am I thinking like the investor? I want you to think about it like this. most people have a bank account. Most people have some type of bank account or some type of savings or some type of investment, be it 401k or Roth IRA. So you have some type of investment account. And the first question usually you ask, if you're setting up your savings, is how much am I going to be getting back for the money that I invested? And I promise you, when we look at so many different companies and organizations, one of the number one things that's missing is, what's the ROI for the investor? How is the package usually has something really great about the company, has something really great about the founder. However, it does not identify the exit strategy. It does not identify the potential ROI for that investor. And if I'm an investor, if you tell me, if I'm an investor and I have to sit the entire presentation and you haven't told me, what's my ROI going to be, what's the benefit for me investing in this company, then you've lost my attention, because it's like, what am I getting for the money? Am I just giving you money just so that you can go in business? No, I'm giving you money for a return on investment. I know that sounds cold-hearted. I know that sounds shrewd. However, we have to raise the level of awareness, because
Yes.
if we don't tell you the truth, this is the absolute truth. The reason that packages oftentimes don't get invested in is simply because they haven't taken the time to really think through, how is the investor going to get paid? How soon are they going to get paid? And what's going to be the frequency of how they're going to get paid? And if you can address some of those things, I promise you, you're going to be a lot further ahead of your competition. Yvonne, what are your thoughts on those?
Yeah, you summed it up. You summed it up nicely. I mean, that really, outside of coming in and actually, taking those different classes and learning this more, because this has to become a part of your just your natural, just as natural as it is for you to lift your hand and to do what you do, to walk. This should be a part of your walking and your talking and how you're presenting your products and your services at all times. So with that, I'm going to say thank you once again for tuning in to FYNB TV, to our talks here, and taking a look at how you're financing your next billion. And we love to bring this information to you. So we love to see you on our next show. If you're interested in actually being a guest on the show, you can actually contact us at sanpetefinancialgroup.com or platformcp.com. That's our platform capital group. And we would love to talk with you about what products and services that you offer, and how we can actually, help you to promote what it is that you do. So until next time, we want you to make every day a great day. Thank you again.
Financing your next $1 billion? Contact us to be a guest. Join us for the next show.